Hello everyone and welcome back to a new video on the channel. Now in this video I'm going to be explaining why at 24 I am investing in dividends for the long term. Now a lot of people when they are older and a lot of people that give advice to younger people that are starting to make some money and get into the markets is just buy the All World, just buy the S&P, just buy the FTSE, whatever, just buy a long-term growth index fund or ETF. And yes, that is probably solid advice for people, for everyday people, right? Just for someone on the street, solid advice, just set up a recurring investment into the S&P every single month when your paycheck hits your account. Just continually set up a direct debit and continue to build that over time and don't check it. However, for me, the reason I am investing in dividends, I do have my growth portfolio, which is, heavy weighted. In here, I am also building these two pies here, this dividend ETF pie and this dividend individual pie. Let's start with the ETF pie. So in here, this is going to be where, again, around 70% of my dividend investments are going to go. And this is because ETFs are a lot safer than individual stocks because they are essentially a tracker of a bunch of different stocks and you're not heavily reliant on one company. If you're investing in individuals, obviously you're investing in that company. If you're investing in an ETF, then you're investing in a basket of companies. So it is essentially safer, if you like, in air quotes, right, to buy ETFs versus individual stocks because you're not relying on one single fail point, if you want to call it that. So this dividend ETF pie here is where the majority of my sort of dividend investments are going to go. Now, I have 5 different funds here. We have the FTSE All World High Dividend Yield, which is just the All World Fund with tracking the dividend companies. So, and this pays around a 3.24% dividend yield. So nothing to really, be excited about, nothing to get extremely excited about, but 3% is still pretty good when you consider long-term compounding. The next one I have is the Morningstar Developed Markets Dividend Leaders. This is mainly a sort of more European fund. And this pays, I think, around similar. For the next the next ETF that we have in this pie is the City of London Investment Trust, which is a UK-based dividend ETF that pays a 4.03% yield. And that again was at an all-time high. Like everything was at an all-time high, right? So I guess we were sort of due a pullback regardless of the war. Yeah, markets can't ever go up forever and ever. Short term, of course, long term, it will sort of be up and to the right, but short term, there is always some volatility. So we will sort of have to see what sort of happens to everything as we continue on during this. So anyway, the next one is the iShares UK Dividend ETF, which again pays similar 4.66%. And then we have the JP Morgan Nasdaq Equity Premium Income, which is a covered call ETF. However, it has performed fairly well. It's only been around for about a year, but it has performed fairly well. So I've got that weighted at around 15%. So we'll see how these perform. Obviously, at the moment, we are down. I've only got £870 in here, right? But at the moment, I've only been invested in these for around a month or so. Obviously, we are down around £30 so far, but again, it was slowly putting money into here. And in terms of the dividend individual pie that we have here as well, I have individual companies. So we have Realty Income weighted at 20%. We have Legal in General weighted at 15%, Main Street Capital 15%, Aviva 10%, BP at 10%, British American Tobacco 10%, Standard Life 10%, and Taylor Wimpey 10%. Taylor Wimpey has taken an absolute beating. It's almost at its all-time low here. And yeah, so we'll see what happens here. I think obviously there is a lot of stuff going on with sort of the real estate market and developers and whatnot, but they do pay a major dividend yield, right? So I'm going to keep an eye on this. Obviously, if it continues to perform badly, then I may switch it out with something else. But the reason for having individual companies as well as ETFs is so that I can sort of generate a higher overall yield without being exposed to as much risk, if that makes sense. So Obviously, the majority, I would say between 50 and 70% of what I invest in dividends will be going into the ETFs, okay, that I have listed here. And the rest we will have in the dividend individual companies. And this is just something that I'm going to build for the long term. I'm not expecting to put 10, 20, 30, 40 grand into these anytime soon. This will be something that I slowly build up. Over time, just to sort of see what we can do, what kind of income we can build on these. So that is really why I'm investing into dividends at 24, is so that I can have a sort of cash flowing income stream from the stock market as I sort of get into, 10, 15, 20 years from now, that we're sort of sitting comfortably, as well as obviously my growth. So that's the goal. I have income plus growth. A lot of people, what they do, especially, and I'm going to get this pushed back quite a bit. I already have. Is people say just go growth whilst you're in your 20s, in your 30s, and then as you're starting to approach retirement, switch from growth into income producing if that is the goal. Now, whilst that is a very solid plan, I like it. It's completely fine. They both achieve the same sort of the same goal. I would like to start to build this now. Just one for simple motivation. Like you can see the dividends coming in. You can see sort of you can see your yield as you sort of get to that age, and you can start to really build this as you go along instead of just putting it all into growth and then switching to income as you get to that age. You're more so sort of just building up to that. It's more motivating for me anyway when I can see this. And of course, I will chop and change things around as the years go on. I won't always be invested what I've invested in now at 24 dividends. Probably won't exactly be 100% what I'm invested in at 50 in dividends. So it's just a case of starting this portfolio now, dipping my feet in the waters of dividends, and really starting to get that snowball going, and reinvesting all dividends that are being paid in this tiny dividend portfolio at the moment. So that is the update. That is why I'm investing in dividends at 24, is so that I can build this income engine in the stock market as we sort of get older and as time goes on. So with that being said, thank you for watching. Let me know down below what you think. Do you invest in dividends, or are you a purely growth investor? I also have growth assets outside of the stock market. I have Bitcoin. I have different cash flow stuff going on in crypto. I have business and all sorts of different things. But for the stock market specifically, this is what I'm doing for the dividend portion of things. Now, in my pensions, in my SIP, I am only investing in growth. I don't have any dividends in there. It doesn't really make too much sense to do that in a SIP. But in an ISA for the long term, sure, why not start building it? So thank you for watching. Hope you enjoyed. Subscribe if you're new, and I'll see you on the next one.